Hi everyone, welcome back to the fourth episode of our YouTube series, The Basics of Short-Term Insurance. I'm Isak from Glenwood Brokers, and today we're talking about two of the most important foundations of insurance: insurable interest and utmost good faith. These two principles go hand in hand. They're what makes insurance fair, legal, and trustworthy for both you and your insurer. Let's start with insurable interest. It simply means that you must have a financial interest in whatever you're insuring. In other words, you must stand to lose something if that item is damaged, lost, or destroyed. For example, you can insure your own car, but not your neighbor's car. You can insure your home, but not your friend's house. Why? Because if your neighbor's car is stolen, you haven't suffered a financial loss. They have. Insurance is there to protect you from your own losses, not someone else's. Insurable interest keeps the system fair and legal. Without it, anyone could take out policies on other people's property, and that could open the door to fraud or unethical claims. So when you buy insurance, always make sure the item belongs to you or that you have a clear financial interest in it. That's one of the first checks insurers make when assessing a claim. Now, let's move to the second foundation: utmost good faith. This principle means that both you and your insurer must act honestly and disclose all material information, especially when you take out or renew a policy. That includes things like previous claims, modifications to your vehicle, security measures at your property, or any other detail that could affect your level of risk. Insurance is built on trust. Your insurer relies on the information you provide to calculate your premium and decide whether they can cover you. If important details are left out, even by accident, it can affect your claims later on. Here's a simple example. If you say your car is parked in a locked garage every night, but it's actually parked outside on the street and your car gets stolen, your insurer might reject the claim because the information wasn't accurate. That's why it's so important to always be honest and transparent when applying for insurance or updating your policy. So, how do these two principles, insurable interest and utmost good faith, work together? They form the foundation of every insurance policy. Insurable interest ensures that you're protecting something that truly belongs to you. Good faith ensures that both sides, you and the insurer, are open, truthful, and fair. When both principles are upheld, claims are processed smoothly and the relationship between client and insurer stays strong. So, to sum it up, insurance only works when there's trust and genuine financial interest. That's what keeps the system fair, transparent, and efficient. If you found this video helpful, don't forget to like, subscribe, and follow Glenwood Brokers for more simple explanations about short-term insurance. Remember, understanding your cover is the first step to protecting what matters most. Thanks for watching. We'll see you in the next video.